Hello, I'm Donald Leggett and welcome to the latest Focus IR interview. I'm joined by Chris Heminway, Executive Chairman at Time to Act, the innovative UK engineering group focused on technology for the energy transition supply chain. Chris joins me to discuss the company's intention to seek the admission of its shares to trading on the Aquis Growth Market. Time to Act is also raising up to £1 million via an institutional placing and a retail offer through the Winterflood Retail Access platform. Welcome, Chris.
Thank you very much, Donald. Welcome.
It's great to have you today. So perhaps we can start by giving investors an overview of the company, a quick explanation of the energy transition supply chain you focus on, and the customers which you are targeting.
Thank you, Donald. Well, as you very eloquently introduced us, Time to Act is an engineering-led group focused on the energy transition supply chain. Our group is based in Middlesbrough, so that means our headquarters, our key management team, our coatings plant, but increasingly a good level of local network and relationships, such as universities, such as the Tees Valley Combined Authority. And Middlesbrough is a very, very good part of the United Kingdom to be in terms of businesses wishing to address the energy transition. So we play in this supply chain, and what that means is that we are not the company that is building hydrogen plant. We're not the company that is trying to develop nuclear fusion. We're not the company that is building massive 20-megawatt offshore wind turbines. We are the company that is innovating into the supply chain, into those industries. And so our typical customers are those industries, those companies building the hydrogen plant, those companies building the 20-megawatt offshore wind turbines, or those companies developing nuclear fusion or investing into nuclear fission.
So why admission to the Aquis Growth Market then? Why is this such an important next step in the growth of the business? And why now? Why particularly now?
So Time to Act was formed in 2019 from the merger of two pre-existing businesses, and we'll talk a little bit more about each of those two businesses. And when we formed the group, we wanted to create what is called a permanent capital structure. And by that we mean owning our businesses permanently, being the best owner for those businesses, at least until a new best owner may come along. And what that means is that we want to be able to turn over our shareholder register rather than turning over our businesses. And turning over our shareholder register also implies that we will be able to use that shareholder register and new incoming investors to raise funding, but also to use shares for remunerating and incentivizing employees, and also to use those shares in acquisition discussions. So a whole range of reasons, but all based around wanting to have a permanent capital model.
So there are two distinct but complementary parts to the business. Firstly, Diffusion Alloys. So what do you think differentiates your Diffusion Alloys business, and what gives you a competitive edge in the marketplace that you target?
So Diffusion Alloys is a coatings company. The majority of diffusion coatings have historically been used in the gas turbine and aerospace aero engines industry. And the majority of our potential competitors today remain within that industry. We decided at Diffusion Alloys to exit that industry, and have exited it over the course of the last 3 to 4 years, in order to focus on clean technology applications. And one of our competitive edges, our competitive advantages, is that we are one of the very few, if not the only, diffusion coatings company to specialize in clean technology applications. And that specialization also means that we have some fairly exceptional physical capacity. So up in Middlesbrough, where our business is based, we have a 21-meter long furnace, which is 5 meters high and which is 5 meters wide, and which weighs 69.8 tons, and which allows us to coat tubes and pipes for example, for the hydrogen industry, which are up to 18.5 meters long. And that physical capacity allows us to coat parts that are bigger, we believe, than anyone else in our competitive landscape can coat.
Diffusion Alloys have an important strategic partnership with Johnson Matthey plc. So what do you two businesses do together, and reputationally, what's so important for Diffusion Alloys?
Thank you, Daniel. So Diffusion Alloys set up a supply chain agreement or closed a supply chain agreement with Johnson Matthey back in 2023. Johnson Matthey is one of the UK's leading and largest chemicals company, is one of the biggest companies in the FTSE 250, is probably the UK's hydrogen industry champion. And what we did was we closed an agreement with them to be one of their preferred suppliers of coated parts for their blue hydrogen applications. And what that means is two things. Firstly, is that it means we stand out as the supply chain partner of choice for supplying coated parts into their blue hydrogen applications. Secondly, is that we are required to, and are very happy to, scale up our capacity to meet their existing demand. So we will scale up our capacity from producing a couple of Johnson Matthey type units per annum to initially up to 8 units per annum. And that confirms our role as a significant partner to a very big, very well-known, very high-profile UK-based chemical and engineering company.
So you anticipate quite an amount of growth coming from this relationship?
I expect a significant amount of growth to come from that relationship. I think investors will be well advised to look at the Johnson Matthey website, look at particularly some of the presentations on the Johnson Matthey website, and look at Johnson Matthey's expectations for growth within the blue hydrogen industry. And we as Diffusion Alloys will expect to be a significant partner in delivering that growth.
Okay, very good answer. Let's turn to Greenspur, the second business of Time to Act. What sort of interest has there been in the groundbreaking, and very innovative, groundbreaking new generator design that you've invented?
Thank you. So Greenspur was founded in 2014. So we've been running and developing this technology for the last decade. And in bringing that technology now towards the completion of its development phase, we find very significant interest across the spectrum of players within the industry. So we talk and have significant dialogue with the Offshore Renewable Energy Catapult, which is the UK government's arm for pushing focus onto North Sea or offshore wind turbines. We have dialogue with and already engaged with 2 small wind industry customers, both of those in the United States. And we have ongoing dialogue and contact with some of the major wind industry OEMs who play in this very big and exciting growth industry. So I can say that we do have very significant interest in what we have done within this technology.
Okay, so a sort of two-part question coming up. What's the total addressable market for offshore wind turbines, which is the market you target? And your generator design doesn't have a copper coil. It doesn't have rare earth magnets. So talk me through those 2 points. What's the addressable market and why is your design so special?
So the total available market, or the total addressable market in offshore wind turbines, whether that's today or by the end of this decade, is around £100 billion per annum. And it would be fair to assume that the generator component of that is around 20%. So you could say that we have a total addressable market for generators in offshore wind of up to or around £20 billion. It's enormous, and it's very exciting for us. So when we set off to develop this technology, beginning in 2014, we focused on some of the materials that we thought were going to be in shortage, or short supply by around this time, or at least by 2030. So we focused on the impending shortage in rare earth magnets and an impending shortage in copper. And so we have designed a new type of topology which doesn't use rare earth magnets and doesn't use copper. So we already 10 years ago saw some of the shortages that the market is seeing at the moment and have specifically designed our topology to address those shortages.
And the benefits are not just that you avoid the shortages, but presumably that it's the generator costs are much lower.
So we're still in the process of establishing the cost of our generator versus the cost of incumbent products. But very simply, the cost of aluminium, which we use in our coils, is significantly lower than the cost of copper. the cost of a standard ferrite magnet, which we use in our generator, is probably 1/100th or 1/200th of the cost of a rare earth magnet. So very simply, a very simple and basic analysis of our material costs will show that they will be dramatically lower than using those specific commodities.
Okay, it's been a fascinating interview. It sounds as though you have several excellent growth opportunities which could benefit from further investment. So tell us a little bit about, you're hoping to raise £1 million. You don't quite know whether you have yet or not. But if you did raise that £1 million, what would you use those funds for?
So we have a very strong balance sheet. We have £1.9 million of cash on our balance sheets as of the close of the last financial year. We will list our shares whether or not our fundraising component is successful, whether or not we raise that £1 million, whether we raise more, whether we raise less. We will list our shares anyway. What we will do with the funding that we have, that we raise, is to use that to debottleneck some of those growth opportunities. And debottlenecking is not really physical capacity, it is more people capacity. So we use whatever funding that we have to take bottlenecks out in our engineering, technical and sales teams and use that debottlenecking process to accelerate our growth prospects.
Okay, it sounds like you're ready for life as a publicly quoted company, Chris. So what sort of news flow should we expect over the next 12 months?
Well, very clearly, Donald, I'm not going to make any forward-looking statements in terms of what we're going to be doing within the next 12 months. But we have said publicly that we are targeting a 50% increase in our underlying sales during the course of the next 12 months. So I would hope to be providing evidence that we're on course to meet that target. We are looking at various new growth projects, and I would hope to be able to announce, or I would hope to be able to provide progress announcements on some of the discussions that we hope to be having in the future with some of those major strategic partners and strategic relationships. And one of the things that we do as a small company, as evidenced by our Johnson Matthey transaction, is that we are capable of dealing with the biggest of the big potential customers and turning those customers into strategic partners. So I would hope to be able to, without making any guarantees, without making forward-looking promises, to be able to provide updates on some of that commercialization and strategic partnership discussions.
Okay, my final question for you, Chris. If investors might wish to participate in the Winterflood Retail Access Platform offer, what should they do? How do they actually participate?
So what individual investors should do is contact their stockbroker or contact their wealth manager or asset manager and invite them to contact the Winterflood Retail Access Platform. And the email address is on the screen as we speak.
Chris Heminway, Executive Chairman at Time to Act, thanks for talking us through the admission to Aquis. For more company information and data, please go to the Time to Act pages on London South East. And meanwhile, do follow us on X or Twitter. That's @_FocusIR_ and @London South East. And register on London South East YouTube to receive alerts to our next Time to Act interview. All that remains for me to do is to thank you very much indeed for watching.